Good morning all. Today we are going to discuss the concept of revaluation account, which is prepared in connection with the admission and retirement of partner. So first of all, we have to understand what is partnership that we have learned in our previous classes. That is a relation between two or more partners who have agreed to share the profits and losses of the business carried on by all or anyone of them acting for all. And we also discussed that the agreement will be either oral or written. If it is written, it is called as partnership deed, which is stamped according to Indian Stamp Act. But we also discussed that the minimum number of membership is 2 in case of partnership, and maximum is 10 in case of banking and 20 in case of other concerns. But now what we have to understand is, once the partnership is started, the members can be admitted into partnership, and the partner is having also right of going out of the business by way of retirement also, or sometime due to death the firm will be reconstituted. So now when the firm is reconstituted without closing down the business, we call it as reconstruction of the partnership firm. That may be either through admission or retirement. So in such consequences, we prepare revaluation account to know the value of the business on that particular date. In order to know the value of the business, we have to check the value of the assets and liabilities on that date. So if the value is higher than the earlier, we call it as a gain, and if it is if the value is less than the earlier one, we call it as a loss on the asset. So now for that purpose, we have to compare the book value and the market value, and the profit or loss on the revaluation of assets and liabilities will be transferred to the old partners. Old partners means the partners which were existing before the change, because the loss or the gain which happens due to revaluation will be transferred to old partners, because they are responsible for this. If the value is increased, that is also because of the partners' efforts, and if the value is decreased, that is also because of the efforts of the partners. So for that purpose, we distribute it to the old partners. Now, how that account is prepared, we call it as revaluation account, which records the changes due to revaluation, that is either profit or gain. Now first let me tell you, revaluation account, as it deals on profit or loss on revaluation account, it is a nominal account because it deals with profit or loss. As the rule of the nominal says, debit expenses and losses, credit incomes and gains. Now while preparing this account, you have to remember 3 rules. One, as it is a nominal account, you have to remember the rule of nominal. And the other 2 rules are, as it deals in asset and liability, you have to remember the rule for assets and rule for liability, which is, for assets, increase in asset should be debited and decrease in asset should be credited, and for liabilities, decrease in liability should be debited and increase in liability should be credited. Now in the partnership problems, you will be given with a balance sheet which consists of the book values. We call book values means the ledger balances, whatever we have arrived by preparing the accounts. Then they also give the realized value, revalued figures, means the revalued figures are the amounts of the value of the assets which are as per the market. Now at present in market, what the rate is, that rate will be quoted in the realizable value, or we call it as revalued figure. Now what we have to make is, we have to compare them. We have to see increase, decrease, gain, loss, and we have to account it. Now I will give you a simple example. Like, as per the balance sheet, the value of a machine, value of building is 20,000 rupees. Now when I inquire that in market, they say that the value of the building at present is 30,000 rupees. Now when the the asset value which is having 20,000 rupees, we are getting it at 30,000 rupees, means it is a gain for us, right? So this will be transferred to revaluation account. So this will be recorded in revaluation account. It is a nominal account. Debit expenses and losses, credit incomes and gains. revaluation account should be credited in this case. And one more thing, what is happening is, now earlier I was having 20,000 rupees asset. Now that 20,000 rupees asset has become 30,000 rupees, which means there is an increase in the value of the asset, which should be debited as per the rule of assets. That is, increase in asset should be debited. Now I will take another example where you see how we have to account in case of decrease in asset. Now we have a machinery which we were using since 5 years. The book value of that machinery is 10,000 rupees, and when I inquire the value of the same asset which has been used for 5 years in the market, it says that it is only 8,000 rupees. Then suddenly I realized that there is a decline in the value, which is a loss for me, because 10,000 rupees value asset, now we are valuing it at only 8,000 rupees. Now as it is loss, we have to see what is the rule for loss, that debit expenses and losses, credit incomes and gains. So when loss has to be debited, which means revaluation account has to be debited. And the asset value, earlier it was 10,000 rupees, now it is 8,000 rupees, means the value has reduced by 2,000 rupees, which means there is a decrease in an asset. So that as per the rule of asset, decrease in asset should be credited. Now the journal entry what we pass is revaluation account debit to asset account, that is concerned asset account. Now how it will be with liability? Now I have to pay creditors rupees 30,000. I say that, then later on they say that don't pay us 30,000 rupees, as you are paying early, you pay only 25,000 rupees to us. What it means? The liability has decreased, because earlier it was 30,000 rupees, now it is only 25,000 rupees, means there is a gain, because as it is liability, the decrease in liability has caused me a gain, because it's a common thing that when somebody asks you to pay less, you will be happy because that is a gain. Now how you have to account it? Again, gains are to be credited, means revaluation account has to be credited, and decrease in liability has to be debited as per the rule, and the journal entry will be concerned liability account debit to revaluation account. And next is now I have to pay same 20,000 rupees to a creditor, but the creditor says, as you have delayed, you have to pay me certain amount of interest, that will be 2,000 rupees, means my liability has increased, because earlier I had to pay 30,000 rupees, now I am paying 32,000 rupees, which means increase in liability, and increase in liability has to be credited, and as due to the increase of liability, it is a loss for me, because I have to pay 2,000 rupees more. So again, losses are to be debited. Because of that, the revaluation account has to be debited, and the concerned liability account should be credited. The journal entry will be revaluation account debit to concerned liability account. So you can pay, if you remember these 4 journal entries or the 4 concepts, then you can easily prepare the revaluation account. Then in our next classes we will see how to prepare partners capital account, and how to prepare the new balance sheet of the changed constitution of the of a new firm for which the constitution has been changed.